The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, market days at this time and at this number, 877-927-6648. And I'd love to hear from you. Wow, terrific shows this morning, all the way from John Logan to Larry Pesavento to the two Tommies battling it out there. It sounded really good because each one gave their own perspective. It was really nice to hear that. Four people, four different opinions on the format for their own analysis, but the conclusions might sometimes be the same. It's the way you go about it, and that's really important. One of the reasons why over the weekend, when I sent out all my charts to my subscribers, to my opening call subscribers, even though we were long the Dow, I said I'm anticipating that Monday should see a doji-type candle. Tuesday should see a sharp pullback, at least a pullback. Doesn't have to be sharp, but a pullback. And that by Wednesday afternoon, we should start to see a turnaround. And that turnaround should see us a rally. I don't know if we'll come back to the highs of Monday just yet, but we should be rallying into Wednesday afternoon. Thanksgiving, of course, Thursday, half day on Friday. But during that half day session, there should be further buying. One of the reasons why I've been looking at this and I have had so many questions, I'm thinking of once again having one of those webinars, because back in February of this year, I was discussing the chart formations in the monthly. Now, I'm not an Elliott wave expert, but I have studied Elliott wave for many years, and I use it within my work, but mostly I do the Chapman wave methodology. But every once in a while, the pattern of Elliott wave becomes so apparent to me that I feel that it is a very important component that I need to include. Sometimes it might be in the futures trading, it might be in just the chart patterns. And my thinking here is that because of the August 24th low, that there's a real good chance that we've started the fifth wave up. If anyone knows about Elliott wave fifth waves, they are very powerful moves. Yes, you can get jagged formations, but at the same time, there should be all-time highs that are recorded in the Dow and the S&P, if I'm correct. And this is something I've been working on, and I'm doing a lot of work at this particular point. I finally freed up my time, some projects I had to finish over the last year or so, getting more time to just to put together a whole bunch of techniques that I've been working on independently, and see if I can put the whole panoply together. It's like a Rubik's Cube, and you just got to get everything placed exactly right in exactly the right time if you're going against the clock. Talking against the clock, the Dow's down 65 at 17,727. S&P's down 10 at 2076. You see, what the buying that you saw yesterday, after each pullback, to keep coming back to that pretty good close yesterday, and then the sell-off today, very sharp. I mean, with all the news that's going on, you would expect that this market should be way down. Dow should not be at 17,700, should probably be somewhere around between 17,300 and 17,100. S&P probably down to 2052, maybe 2047 level. So I'm kind of impressed, and even though I know it looks very selective, but at the same time, if you look at the smorgasbord of detail, you will see that it's the new economy, the NASDAQ, which is really being superlative here, and on the looking at the New York Stock Exchange, where some of us old fogies keep looking at. Some of us have been around the block a few times. That's the one that we've always looked at because it's just, New York's a big, broad New York Stock Exchange. That's lagging. So this is a very important period because we're going to see if there's a relative strength now between the IWM, which is the Russell 2000, which often, not always, but often has a little what we call a traditional year-end rally where it plays catch-up to the general market, the low-cap stocks. Question in the den, peak D. Why the start of wave 5 now and not, let's say, in January or February? That's got nothing to do with it. The August 24th started to move up. And I'll go into it, but the real details will come later because this is a work in progress. I don't want to jump the gun here. For my webinar participants and for my subscribers, you know exactly what we're looking at. There's a time frame reference that goes to 2016, a whole bunch of things. So now let me just do this quickly, and then we'll go to our callers. We've got the comp index is down 36 at 5,065. So that's still showing weakness. We've got now gold is up 760 at 1074. Silver's up 12 cents at 1416. I was kind of impressed with a bunch of things, and my feeling was that it was worth an experimental trade because we do not do much in the gold index, and I've been a bear in gold since for years now. Since that September, what was it, 2000 and can't even remember. I should remember. Whatever it is, top. And at this particular point, I think there's a chance that the dollar could just have a little bit of a pullback, and the general market could just relax a little bit here, and gold might have a bounce. Maybe the commodities in general, just a bounce. So just a trading thing. So let's go on, and we've got bonds, and this is going to be really important. Look, the TL. Let me move this away. This is the E-minis are down 11. And that's very interesting. E-minis are down 11. Dow's only down 66. So there's a divergence there. But it's holding the 9-period exponential moving average of 2072. I just have to tell you that if the S&P takes out the futures, take the December futures, take out 20. What was the low today? 2065. Yeah. If they take out 2063. I believe that's the 200. Got to double check. We've got so many moving averages. I believe it is 21. Oh, that's the one I put in for a while ago. 21 moving average. We'll call it 20-period moving average. That coincides there, right there at 2063. That must hold in the next couple of days. Why? Because the 2363 goes, as you can see here. That is called the gray. Excuse me. That is called the gray A. That means you're under the peak F top of 2110.25 in the E-mini. This dash pink line became resistance, and that A is a gray A, which says it is a retracement failure mode. All that means is it's retracing, trying to get back to the old high, but it could fail at any point because it hasn't established a new recovery high. As soon as it does that, it kind of forms its own independent unit and gets a different color. So in the meantime, back in the range, the weekly is still really strong. The monthly, let me move this away, it's a 120-minute chart sitting on the 200-period moving average. Let me just go to the S&P itself, SPX.X, there we go. And that shows you that monthly chart is still holding extremely well with less than a week to go at 2076. 2059 is the 2059, what does that say? 2039 is a 9-period exponential moving average in the monthly chart. Technicals are not great there. So let's go to Mark in Fort Collins. Mark, how are you?
Good, Basil. How are you?
I'm well, thank you.
Good. Hey, so I'm trying to play this sharp slide that you were calling for, which we got. That was very fortuitous. And then this bounce that we may get into through the holiday. And I'm just trying to gauge. I got out of some shorts when the market was down about Dow was at about 100. And I'm just looking to flip over into possibly the long side. Do you think we've seen the lows for the day, or what's your call on that?
Well, I think the Dow 30 is probably not going to lead the broader S&P 500. Right. So I'm watching this. Let me just pull this chart. So this chart here that I'm showing, well, not the price that's on there now, that's Netflix, is the E-mini. And the E-mini 10-minute chart had the pattern that I call the lowercase h that goes to a lowercase m. So far, it's been a successful test because it hasn't broken the low that was made earlier this morning of 2065. You made a bounce and then a retest low at 2067.25. Now, I'm not trading this right at this particular moment. And this is exactly the point, excuse me, where I would probably say, I have no position at all. I would not be putting in a position right now because I want to see whether or not this is going to give a retest, and that retest should come before 1 o'clock, and it should be successful. It should not break 2065. And if there's a move, if we're done now for the day, I don't think so, but if we're done for the day of the testing, I suspect there's another 20 minutes at least to go. Then you will see the E-mini quickly go to 2076, and the moment it surpasses the recent high of 2079, starts trading in the 2080s, I think the S&P will start to follow the Dow, and the Dow will improve. The S&P will improve a lot. My thinking here is that this sell-off could possibly go into Wednesday, and it's by Wednesday afternoon that you're going to get to see whether or not I'm correct, that there's going to be a rally and that this is a partial sell-off, and that the dollar, I've got the dollar up right now. I've got it down 8 cents. Let me just check if I'm correct. Down 11 cents. Okay, so between 8 and 11 cents, holding beautifully above the 99.36 9-period moving average. So as long as the dollar's holding up, my thinking here is that maybe, unless there's something that extraneous happens, that we're forming some kind of a base for a bounce. Now, one of the things I'm a little bit concerned about is that important stocks are making D, E, and F in their daily charts. And that says that maybe we need a little bit more time on the downside. So here's what I'm thinking. At this point, you've traded the short side, you've taken profits, you're just kind of stepping aside, waiting. Is that correct?
Yeah, that's correct.
Okay. So then the way I would do where would you want to go if I was going to suggest to you that at a certain point, if the Dow, say, gets to 17,750s later this afternoon, then a good chunk of this little consolidation has been done. What would you want to move into what's your normal thing to go to on a rally?
Well, I'm looking at the 120-minute chart on like the major ETFs, like the diamonds and the SPYs. Most of them have only made a peak C. The IWM, I think, has done a D. And so I'm just kind of trying to feel, I'm thinking the SPYs or the diamonds, at least to test the recent 210.12 high on the SPYs, possibly get to the highs of early November.
Okay, so then here's and would you do it with the stock or would you do it with options?
I'd probably go out a couple of weeks with some SPY calls or some diamond calls.
Great. Okay. You know what? I think there are a lot of people kind of in your position right now. There are also a lot, even more people who are really wanting to short the daylights out of the stock. Give me a moment and I will strategize, because I wanted to have a little bit of a closer look during the break at the IWM, the Russell 2000, to see if there's a chance that maybe that's the one that gives the best percentage. I'll be right back.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. Dow's down 67, S&P's down 10, and we're on with Mark in Fort Collins, Colorado, and we are talking about both the diamonds, the SPY, the Qs, the IWM. We're looking to see what would have the best, if I'm correct, that we're getting a pullback here that is just a breather, and that there's a good chance, at least the way I'm looking at it, that if there's a rebound towards Wednesday, especially Wednesday afternoon, that it could follow through into Friday, and that might be the consolidation that we've seen. I'm looking, and there are two things. First of all, Mark, I think that because of Amazon and Priceline, well, Priceline is down. Of course, it would be down with the news today of that airplane, but that airplane coming down has to do with I think it's fighter pilot. I'm not sure. I didn't see it. So I just wanted to see percentage. Maybe it is best to go with the safest, because you can always add I'll tell you exactly what to do, because I've already done the work. So the IWM is trading at 117.14. You might miss a point, but it doesn't matter, because if you miss a point and it's able to get to a leg C, this is the IWM above 117.89, and you've got to, I don't know if you're able to do this, but if you have an indicator that shows you the percentages at the same time, see that the IWM is down only 0.17%, the Dow's down 0.21, S&P's down 0.35. That's not a guarantee to say that the IWM will lead, but that very often happens at this time of the year if there is any strength at all. So I'm going to suggest to you keep that in mind. You're going to lose about a point, less than a point. But at 107,
Can you explain something to me real quick?
Yes.
I've got the IWM in just a leg. I don't see it. It was traded at 116.65 on the 18th.
Yeah, you're
and
right.
The 19th.
It's A.
Right.
What I was going to do is I wanted to be a little conservative, and I used this double top. I was going to change it to a pink to say that's Chapman Wave, Phantom Peak, because they were it is exactly the same price. I want to be as conservative as possible so that I was going to make this B, but let's just be formal at this point, and let's call that A, gray A. But I would keep in mind that it could very well be a B. I want to be a little ahead of the game because look at the diamonds, DIA. There was no pull. There was no two parallel highs. This was just clearly a gray A. So I just wanted to be a little conservative there. But what I am saying is that the IWM, I would get a position penny above. But my favorite right now, if you look at the Qs are down 0.61. The weekly chart of the Qs is extremely strong at this particular point. So I don't want to dismiss it. I've got a feeling that just at this particular point right at the moment, you've got some leadership. If you look at something like a Home Depot, I didn't even see this, but Home Depot went from 118.61 on the 16th of November. That's like a week and a half ago, gapped up, and is trading at 133.02 right now. So these sudden spirals to the upside are negating any weakness, because we saw there was weakness in the Dow the other day with UNH intraday, and yet the market managed to hold well. So here's what I'm thinking. To be a little conservative, I think the Dow is better than the S&P right now. So the diamonds, we had the diamonds, we got out with a bit of a profit, and I'm thinking that I might be going back in. The diamonds right now are acting well. So that would be a position that I would take. It's going to take a little more work for the diamonds to get to 178.98, and that might take a couple of days, but it's acting very well today. It's way off the low, way above the 9-period moving average, and the stochastic's getting closer and closer to 80%. So diamonds, I would prefer to the SPY. The IWM is something I'd keep in mind, and the QQQ series, if at any point intraday between now and Friday, if the QQQs start to have a better percentage that is, than the Dow or the S&P, I would probably consider that as well. So where would I be right at this particular moment? The Dow's now only down 32. S&P's come back to -6. I would start a little position. Really, I would start it small because my thinking was that we would have at least 2 days. We had kind of a half day yesterday of weakness. We've got maybe a full day today and a little bit of time tomorrow. So I'm looking at it and I'm saying risk reward says that there are still buyers that are coming in. Bad news is being ignored. Day is young by the end of the day. I could be wrong. So don't get too carried away. I think you're going to have time. Why? Because if there is a rally that starts off now, goes into Friday, my thinking is by next week, people are going to have to come on board. They're just going to have no choice. So
Hey,
that's my thinking. Sorry, what?
Okay, when you have a chance, take a look at Athena. That thing's taken off, and I have no idea why, but I know we were looking at shorting that.
Thank goodness we're just keeping it on the list. Thank you so much for calling, Mark. I hope I helped. I'll be back, folks.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, everyone, we're back. Yes, that 10-minute chart. Remember we were discussing that H pattern that goes to an M pattern, and that if we didn't take out that low, but instead took out this particular high right here of 2078.50, you could go higher. Well, this is the left side, right side, which I typed in, and I had it for quite a while since early this morning. Left side, right side, and here's the Chapman wave right there that make it a green. I've decided to make it green. Let me see, does it show up as green? Yep, it does. Okay, as green goes green going up, and I use pink going down, that's what I'm going to start doing. And that green actually is not, it should be a darker green, huh? Make it a darker green right there. And that green says that by, excuse me, in this particular technique, by 11:30 on the 24th of November, there should be a test of this candle right here that has a high of 2081.25, the candle of 3:40 this morning Eastern time. And we went right to the 200-period exponential moving average to a high of 2080.50. And I have no choice now but to call it, actually I could call it ABC. It's very complex. I don't want to do that. I'm going to make it simple. I'm calling it an A. It can A that could fail. I don't know if it's going to work or not, but I'm just calling it an A right now. Wow, if this 10-minute chart is really an A, we should be seeing a B, a C, and a D. When I get the rectangle formation like this, even with a breakout, I usually say the most important thing to look at is the 200 period in this case. This is the only technical tool that I have on it. I forgot I even had it. This 200 period moving average right here. I don't have the 9. Yep, I do. Good grief. Oh, did I take? Oh, I took another chart. Okay, this is not quite the naked chart, but I don't have the MACD and the stochastic. So this is saying that there's a really strong move that's unfolding. It broke above the 9-period exponential moving average. The left side, right side price time match is actually 10 minutes late. Well, it might not be 10 minutes late. It's within the 10-minute bar, but it is actually achieving exactly what we were looking at. And the 200-period moving average is going to be very important. Why? Because that's where you start to see either a deflection or an inflection. Inflection meaning it breaks right out or it deflects lower. That's number one. Number two is it also says that if you go nicely above it, nicely, what is that, a technical term? What page is nicely on in the technical analytical book on analysis for the stock market? Let's see, nicely, under N, I guess. So meaning if it breaks through and holds and turns this whole area where I've got the rectangle formation as well as the 200-period moving average of 2080.64, obviously this is in 25-cent increments, so let's call it 2080 to 2080.50. If that can become over the next 4 candles, that's 40 minutes, a support area, then all of a sudden, what I'm doing is, remember this, if you're looking at this cup formation, remember I spoke about the arch that goes to an M pattern? Well, this M pattern came in even quicker. It came in right there, a very small. So as a, let me move this away. As a technical pattern, what we've got is, now with TradeStation, they have fantastic drawing tools. So it's just real easy for me to move around like this. Sometimes, I've noticed that some platforms you're able to print, you're able to do, you're able to type, you're able to do a couple of lines and maybe some things, but you can still be very creative. If you cannot draw an arch formation, you can do a rectangle and say that rectangle is really an arch. I mean, you can work things out. Most importantly, you can see I'm trying to keep it as simple as possible. So when I said to Mark earlier, at this particular point right there, I said, I don't want to do anything because it could slide and retest or it could break out. The moment it started taking out, say, this candle high of 2075.25, that was at 10:30 right there, I'm saying, uh-oh, it looks like it's going to go to the top side. And I would have just grabbed. I try not to do that. I try to plan it. But sometimes you just got to grab the move. And I just grab at least a small position on the long side. And I say, okay, I want to trade to the 200-period moving average. When it hit that, if I'm busy, I just take that and I'm out. It doesn't matter how little or much you make. I'm out. I'm done. Maybe that would be a 30-second play. A minute, 2 minutes. Who knows? Who cares? And I'm out because why? I'm going on to my show or whatever it is. So, or you say, now I got a really great entrance. That's my stop, or give it 50 cents. I usually say that if I'm making money, I don't want to really give back that money. I'm prepared to break even rather than break even and even see it hit that number, take me out and then move higher rather than say, okay, I'm gonna let it hit my stop. I've just seen a profit. Why do I want to give it back? So that's my thinking, all right, when it comes to these quick trades. But now this is very important. Let's just say I'm holding. What I would want to do is, where would I add to a position? Well, I'd have to wait. I'd have to wait for a conglomeration of bars. Maybe it's going to form. Let me draw this in. Because of this resistance, maybe it's going to form something. Oops, that's too long. Make it shorter. Maybe it's going to perform the pattern that I talk about, that stalk leg formation or sideways consolidation. And within that, I'll decide whether I want to add, subtract, or it'll take me out. So I just wanted to go through that. Now the same chart with the technicals added. Look at this. If I can find one right here. Look, that's with the technicals added. This is the 200-period moving average right there. It's a program I had written for me. And their boundaries very much like Bollinger Bands. They're not Bollinger Bands, but they're like that. And there it is. Bam, you hit it exact. But when I'm doing this, you see that you took that out by just 25 cents. So this really is the start of a new move. But here's the thing I've been working on for a long time. I'm very close to making some kind of a definitive formula that I can use over and over again. I haven't quite gotten to that point yet, but I have been for a long time. I'm talking about years now. I've I've put in the up arrow, even when, because it's used time and not broken down. And that says if it does break down after this, well, tough luck. But look how much it gave you. It gave you all these bars above that low point. And even though the technicals were really whippy, they are moving higher. And even the stochastic, look at this, the on-balance volume even tanked over there. But I'm looking at this and I'm saying I can always have inside bars. So now an inside buy signal. So now I've got an A, I've got another B, and together I've got a cumulative C right here. And that C is suggesting that there could be a bit of a pullback, but it should go to at least D. And this is the 10-minute chart. So all of a sudden, remember the chart that I had before? So this is an elevated version. It is a version that I kind of mentioned briefly just now that I said, oops, I should take this as an overlapping wave. But in fact, I wanted to show it with the technicals, that is the MACD. Now, what I would do normally is I'd go to this and I say, I want to be as strict as possible. I don't want to be looking at an A and thinking, oh, up, up, up. I want to be looking at it as a pattern that could fail because it's been in a rectangle, it broke out, and this bar held above that. That's really positive. But the weight of evidence says, look at all these red candles. There might have to be a little bit of a pullback. But if it accelerates right through, that's really positive. Then I get the big picture, and the big picture says, look at this. You've got your H pattern. I can't find, just in my mind, I can see the chart perfectly from yesterday that we were looking at. And this is what we saw. Oh, it was maybe the 120-minute chart. So this is the big H, the pattern that we look at, made up of a lowercase m pattern, M, big H. And that says, watch this because you could very well, this, I've already drawn it. This pattern that we're looking at here can suggest that if you take that out, you can start another move that goes even higher. And this candle, this Chapman wave inside wedge target line keeps activating as it moves up. It says repellent line, try to get through. And every time it gets through, that's really important because it says it's getting closer to what? It's getting closer to a left side. And I'm going to go to the low just to be as conservative as possible. Right here, this low, right there. Right side, price time match that says if this continues to rally, and I think there's going to be bouts of selling because there's a lot of denial here, then we're looking at a chance that by, and I'll give you the time exactly, by 2:30 this afternoon, only if this, I love when these, look how closely this matches. Look, it became, for 2 bars, it was the support. Then it broke down. Then for 2 bars, it's been 3 bars, actually, it's been 4 bars, it's been pretty close to resistance. So I've got validation that this is a line. I'm going to make it light green because light green is always very positive for us. That this, besides being the repellent line, is really a magnet target line. And therefore, every time it goes close to it, it validates the chance to go, we've already done it once, that you can go twice. Now, that's a stretch because what it does is it says from this morning at 2:30, at 20.87.25, you might have gone down to 20.65.50, 23 points, 20, whatever it is. But you've already come back very strongly. And it says that there's a chance that those trams that have the overhead wires, that instead of being a repellent line, this becomes the magnet line. And it just keeps trying to trail its way up, 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 up. It looks like, at the Guggenheim in Bilbao, they have the funicular. It looks like a little funicular, okay, to go up the mountain, the little trolley car. Okay, so much for that. Now let's get back to our story. What would make gold move higher here? To my eye, just consolidating in the dollar. The dollar doesn't have to go far. It could just be hanging out between 100, maybe 101, and 98.50 for the next week or so. But if it really spirals through, I don't see how gold can actually hold any rally. But I've got a feeling there's, just from the action I saw late yesterday, actually over the weekend, into yesterday, into last night, into this morning, I think there's a chance that there's a bounce. It's treated as a bounce. Don't get too carried away. That some of the gold stocks, which have been acting very well, could move higher here. We'll see. Okay. So in the meantime, as I said before, in my opening call, we've got some positions now for the first time in ages in gold. But believe me, I've made the stops really tight. I don't want to mess around because I have to treat it now because the monthly charts are still so bad. Look at the GLD. This monthly chart is just horrendous. Look at that. So this is really just, and so this is EF, this is not even an FG. Yeah, FG. Perhaps it's an FG/C. So the monthly chart is, I still have that target of for gold. And the GLD 95.75 is the 200 period moving average. It doesn't have to go all the way to it, but I think it's going to go under 100. Meantime, it can have a little bounce. 103 in the GLD, maybe you could go to 105. Nice little bounce, and then maybe even 105.30 and then come back down. But that's only if tomorrow it doesn't collapse. Take out, the GLD must not take out today's low of 102.69. All right, so we've got that out the way. I wanted to talk about, just quickly, I wanted to check to see any emails. How much more can I show? Wrong mouse. Got to use the mouse for that computer. Here we go. Okay, good. So I can keep going because we haven't had any questions. I usually get a whole bunch of questions in this break that's about to come up. So before the break, let me show you something very important. The VIX index, VIX. The VIX index is confirming for me that the weekly chart spiked 2 weeks ago at this particular point has to be thought of as more an aberration to the trend, which is still going down to lower lows. And we'll see if it makes, well, it's making lower highs, I should say. We'll see if it keeps making lower lows. But the way the monthly chart just collapsed from 53.29 to the recent low in the 12s, I'm looking at this. 1280 was the low there. I'm looking at this and I'm saying there's going to be a lot more, especially end of the year. There we go. There's going to have to be a lot more on the upside of the volatility index that has to hold. I don't care about today spiking at 17.21 over the 200 period moving average. I do care that it's now under the 16.52 9-period exponential moving average. Yes, the day is young, but what it is saying is that it's going to take a great deal of effort to continue a down move in the stock market when you've got just enough stocks, like we saw Home Depot, just enough stocks that are able to counteract and negate market weakness so that the index actually closes higher. At some point, if the technicals start to fail, and if I show you so that's the VIX. Let me go to the New York Stock Exchange, because I spoke about it earlier on. Look, the New York Stock Exchange technicals at 58% in the stochastic, and the MACD, okay, but it hasn't crossed positive. It could make a W formation. This is a very important moment because the 2,000 stocks, the weekly chart, that's just not good action. That's why I'm thinking this is a rotational effort, and I'll talk about that when we get back. Basil Chapman, Tiger Technicians Hour. Dow's down 12, S&P's down 4. Dow was actually positive just a moment ago. I'll be back.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi folks, Basil Chapman right here, and we are looking at the Dow up 9. S&P is down only 2 now, and I think with Kevin Hinks coming up, this is just a great time. So for instance, Mark called me about what he should do, and he was going to use options, and I gave him a plan of action. I think that the expert in the option area is the person that you should really be looking to. I'm looking at market trends. Kevin looks at both market trends, and I think if you have a call with the kind of question that we were looking at, that I got just a short while ago from Mark, looking at the consolidation that I expected for Monday with a doji candle, and then a down Tuesday going into a slightly higher Wednesday, rallying into Friday. If that's kind of the scenario, everyone keeps calling in. I'm looking at the short side. I'm still looking at the long side. We've added a little to the long side again today, as well as short side. I think a mixed market is exactly what you're going to be looking at, that it's a bifurcated market, but there are some sectors and some, like the Dow is acting beautifully here, and there are some Dow stocks that are doing fabulous. There are a couple of Dow stocks that are not, but I'm looking at this as a rotational an upside rotational correction basically happening at this particular point. And I think coming up next is Kevin. I highly recommend, if you've got that kind of question, if he has time and if he wants to deal with it, that would be the way to go, because options might be a better way to minimize your costs overall, know exactly what your risk is, and at the same time, it gives you a chance to not even worry about the market, because you've got your portfolio, you want to protect it, or you haven't got enough in your portfolio and you think there's a chance that we might move higher based on what we're looking at right now. I don't like the XLF. It's giving me the willies here. I don't like what's going on in the XLF. It should be way better, and it's not. But in the meantime, there are sectors that are doing very well. So, okay. And now let's go. The question I had was Tyson Foods, A shares, trading at 49.38, up $1.29. This is in the defensive food sector. I saw Tyson go by the other day, and I thought, oh, I haven't looked at Tyson for ages, and then I forgot to look at it. But I got an email now, and it says, Mr. Chapman, Mr. Chapman, wow, can you please give me an entry point of TSN? Thank you. No name? Well, no name. I'm going to tell you what I'm looking at now. It is great. I'll tell you what I would do. Wow, this would be a great time to be looking at an option, but I'm going to make the suggestion because I believe this is actually leg B. I could give you alternate counts. I just think this has all the characteristics. Does it? E, F, G. Yeah, it has all the characteristics of a move that shows leadership, and I think fund managers will gravitate. Grab a little bit right now at 49.43. If it's a little bit, therefore I'm going to make the stop wider than I'd normally look at. Give it a 2-point stop at 49.43, make it about 47.43, maybe even 47.20, but give it a little bit of room. And then I would add, if the pullback that makes peak B only comes back about 1.75 points from wherever the peak B is, might be tomorrow, might be, who knows, but it comes back 1.75 points, maybe 2 points from the high, that is, that would obviously take out your stop. But I'm thinking that it's going to go a little higher before it makes peak B. Actually, I'm going to be a little more conservative. 48.10 is the low today. 49.39 trading right now. Buy a little bit right now. And I would like to say don't give it a stop because I don't want you taking it out. But I'm going to say the stop should be somewhere around, I think 2 points might be too much. That's saying it's giving it back. The high of the candle of the 23rd was 47.71. Make it 47.69, the stop on whatever position you have now. If by Friday to Monday of this Friday this week or Monday of next week, it is not taken out 48, let's go a little more conservative. If it hasn't taken out 48.10 to 47.90 and it starts to move higher, add a little bit more because I think legs C and D will be coming. So that's my look at Tyson. Very nice. I like to end the program like that with a nice positive. So, folks, we've got Kevin coming up. I'm going to just run this real quickly again. VIX is down at 1593. If by the end of the day there's a reversal, VIX goes back to 16.30. Okay, that means the consolidation goes a little longer. In the meantime, I love the move that's going on right now. And I will be back with Tom O'Brien later this afternoon. Have a great day.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.